was a big day for the Sime Darby Group following the execution of its demerger exercise, which culminated with the listing of Sime Darby Property Berhad and Sime Darby Plantation Berhad. However, investor reactions were decidedly mixed. By the end of the day, Sime Darby's share price jumped 27% to close at RM2.35. But in contrast, Sime Plant fell by 10.38% to RM5.01, while Sime Prop fell even further by 20% to RM1.20. Rakuten Trade VP Vincent Lau said that the sentiment surrounding both the property and plantation segment is quite negative at the moment. He says most plantation counters have underperformed and that there remains a lot of concern on overhang for the property sector. However, given that both are key players in their sectors, he does expect the situation to normalise. Earlier in the day, Sime Group Chief Jeffrey Salim Davidson had said that the dividend policy of the group in its pure play form would remain the same. The Royal Commission of Inquiry has affirmed that Bank Negara incurred 31.5 billion worth of forex losses due to its forex dealings in the 1990s. In its report, the RCI alleges that BNM's forex dealings were excessive and speculative for profit and contravened Section 31A of the Central Bank Ordinance 1958. The RCI alleges that there was deliberate concealment as BNM's annual reports did not state actual losses incurred for its forex dealings from 1992 to 1994. RCI said that there is evidence from the inquiry that suggests possible offence of criminal breach of trust of funds belonging to BNM under Section 406 and 409 of the Penal Code by people directly involved in the forex dealings. According to the RCI, the huge losses had a significant negative impact on the economy. It also impaired Bank Negara's ability to fulfill its role as the country's central bank. Malayan Banking Berhad saw a 30% increase in third quarter net profit on higher net interest and Islamic banking income. Net profit came in at 2.03 billion compared with 1.8 billion the year before. Revenue likewise grew but by a smaller 2.7% to 11.6 billion from 11.3 billion a year earlier. Also helping numbers was an increase in net earned insurance premiums that increased by 289 million to just over 1.3 billion ringgit for the quarter. Looking ahead, Maybank says it is optimistic of its business outlook, explaining that the group key performance indicator for return on investment is 10 to 11%, while loans growth is expected to be around 3% in line with the industry. It was a fairly solid first quarter for Hong Yong Financial Group Berhad as net profit grew by 17.9% due to higher contributions from commercial banking and insurance. Net profit clocked in at 455.25 million compared with 386.19 million the year before. Top line numbers were 8.2% higher at 1.28 billion. Drilling down, HLFG's commercial banking division Hong Leong Bank Berhad's net profit grew by 17.8% to almost 639 million. According to HLB Group MD and CEO Dominic Fuda, the better numbers were due to robust top-line growth, prudent cost control and healthy contributions from overseas associates. HLFG President and CEO Tan Kong Koon said its core businesses have continued to show strong credit and liquidity risk metrics, explaining that the group has a clear and focused business and digital strategy and it will remain focused on building long-term sustainable value. Passenger service charge or airport tax at KLIA2 is set to go up by 46% come January 1st next year. Specifically, the PSC for international destinations beyond ASEAN will go up from 50 ringgit to 73 ringgit. The Malaysian Aviation Commission or MAVCOM announced the completion of full equalisation of the PSC to be implemented across KLIA, KLIA2 and other airports in Malaysia. MAVCOM stresses though that despite the revisions, Malaysia's airport tax remains one of the lowest in the world, adding that airports that do not maintain or achieve the airport service standards would be imposed a penalty of up to 5% of aeronautical revenue. MAVCOM says that the objective of this framework is to enhance passenger comfort at the airport in service of a better airport user experience. The new charge will be applicable to tickets issued from Jan 1st onwards and will not affect tickets issued prior to that date.